Our next guest says the models suggest these trends could continue. Joining me now is Tim Hayes, Chief Global Investment Strategist at Ned Davis Research. Tim, it's good to see you.
Thanks, Mike. Good to be here.
Talk about your broad framework coming into this year. I mean, we're coming off of 3 strong years for the equity markets. Obviously, the trends are good, but you suggest maybe it's a maturing bull market. So what's the basic bottom line for you?
Well, it's a mature bull market in that most bull markets don't last this long. In fact, this bull market, if you go back to history all the way to 1900, it's lasted twice as long as the median. In fact, it's the 9th longest bull market. So it's gotten pretty mature. It's also, when you have that long of a bull market, it enables sentiment to get very optimistic. So the market's gotten very complacent. Underneath the surface, the breadth has been very weak. We haven't had that kind of strong momentum that you want to see to kind of give you that another leg higher. So I think the market's pretty vulnerable right here, and we'll see how it does next week when the earnings come out.
And in terms of the global picture, it would seem as if breadth, at least in terms of the number of markets that are performing well, is looking pretty good. So where would you emphasize?
Well, yeah, that's especially when you think about emerging markets, is that that's where we've seen very good breadth. And really, if you think about what happened about a year ago, two kind of consistent developments happened. One was, well, the inauguration of Trump, and then the other was when the DeepSeek AI program was announced, and that was really became a turning point for EM. And after that point, the U.S. started to really underperform, worried about the tariff impact. We had the Liberation Day, you had the taco trade comeback, but that lasted about 2 months, and the U.S. stalled out. Throughout that time, emerging markets did very well. They held their own and actually really started to accelerate, and you really saw things separate around the end of October, when Meta announced its earnings, and that sort of became the beginning of a big problem for big tech, big cap tech. And EM then continued to benefit the relatively attractive valuations of the tech stocks in EM, not just DeepSeek, but throughout that area. And we pointed out how the median PE of the top EM stocks has been so much lower than the median PE of the U.S. Tech stocks. So that, together with also another trend that's helped EM, is that EM currencies have come back. That's really helped markets like Brazil have participated, South Africa benefiting from the commodities and materials emphasis in that market. And so it has been very broad. It's not just, it's really been Pacific, benefiting from the tech theme, Taiwan, Korea, as well as markets that are benefiting from the materials comeback here, with the metals doing as well as they do.
For Taiwan and Korea, that's heavily leveraged to semiconductors and so on. Does the U.S. semiconductor trade have to work? Does the U.S. AI trade have to work on some level in order for those markets to continue?
Well, I think what we've seen, which is interesting, if you look at the tech sector for EM, it's been making new highs. It's up 20% over the last 21 days. And meanwhile, the EM's been the weakest, the tech sector's been the weakest in the U.S. So I think what we can, it's not necessarily that people are getting out of tech. It's really more about transitioning into better valued tech, which you'll find outside of the U.S. I think that's kind of what we're going to continue to see.
You guys sort of have the mantra of, don't fight the tape and don't fight the Fed. So the tape is maybe a little bit, it's still got something to prove. Fed maybe going to get a little bit lower here. So what are you watching in that direction?
Well, certainly the Fed is one of the positives. In fact, we're being that we do follow that. Don't fight the tape and don't fight the Fed. We're maintaining a modest overweight to equity.
Okay.
So we're not yet saying it's time to get out. The market's kind of trying to work its way higher, and let's see, either we get a renewed momentum once we get the earnings coming out soon, or we're going to get more disappointment after 2 very good earnings seasons. That, I think the market's expectations are that we're going to have another good earnings season. If that doesn't happen, well, that becomes sort of a driver of contingent selling.